Okay, next up we have Heavy Minerals Limited, ASX code HVY, and they have a market cap around 6 million. Heavy Minerals is an Australian-based industrial mineral company who own 100% of the Port Gregory and Red Hill Garnet projects in WA. We welcome today Heavy Minerals CEO Andrew Taplin. Andrew, over to you.
Thanks very much, Paul, and thanks to everybody for taking time out of your busy schedules to listen to the Heavy Minerals story. If we can just go to the next slide, Paul, this is our important notice with the normal disclaimers. The presentation's been uploaded to our website and the ASX platform, so if you see a need to read this in more detail, it's available. Thanks, Paul. On to the next one. With the short period of time that I've got, I'm going to cut straight to the chase, and I'll come back and put some more flesh on the bones. The real value proposition, the near-term value proposition with Heavy is our Port Gregory flagship project. Based on the scoping study we've undertaken, we require $110 million of capex to stand up a greenfields garnet mine just north of Geraldton. We have got a pathway to fund the lion's share of the capex. It's not a long-dated project. We can be in construction by 2026, and we can be producing 150,000 tonnes a year of finished product by 2027. We've got a free cash with this project alone. We've got a free cash after tax. I stress free cash flow after tax of $37 million a year. For 16 years of mine life, that's $588 million over the mine life. Project NPV of 253 for the 110 mil capex, which is not a bad ratio for a small sticker price. And as you can see on the slide, we've got a market cap just below 7 mil. So I'll let you make your own assessment of the undervaluation of the company, but good opportunity to come on the journey and enjoy that re-rate. The other notable points are very small number of shares on issue, about 58 million shares, 320 mil cash on hand at the end of last quarter. It's about the same, be about the same at the end of this quarter. However, as we've announced to market, we've got a syndicated royalty in place, which will top that cash balance up and get us through the pre-feasibility study, and we anticipate us getting us all the way through to FID as well with the same vehicle. Just while I'm on this slide, you can see in the background there are some garnet particles there. They're magnified. They're less than 1 millimetre, but the notable piece I just want to call out, they've got nice rounded edges on them. So I'll come back to that in a subsequent slide. Thanks, Paul. Next slide. We've got a really solid team. Adam Schofield is our chairman, significant corporate experience as well as operational and project development experience. We're very fortunate to have had Aaron Williams just join the board. Aaron's an industry veteran in the garnet space, having spent significant time with GMA. GMA is a neighbouring garnet mine that have been operating for 40 years, who've got a tenement immediately adjacent to ours. And more recently, Aaron is working in the blasting equipment hardware space. So great skill set that we have recently onboarded with Aaron. Greg Jones has been with the company since it was listed in September 2021, formerly with Iluka for a couple of decades. Mineral sands resource geologist. The company's competent person, knows our resources like the back of his hand. And myself as CEO worked with the majors, developing projects, operating projects and assets worldwide. I've worked with a couple of juniors as well, and also a mining contractor as well. Thanks, Paul. Heavy is an industrial minerals developer. We explore. The business model is we explore, we develop, and we operate our own assets. The flagship project is the Port Gregory project, just north of Geraldton. We've undertaken a significant drilling program in a short period of time, 166 million tonne resource with about 6 million tonnes of contained garnet. The important point, high level of definition, we've got 71% of the resource in the measured category. To put all of that into perspective, there's enough garnet in that resource to supply the global market for around about 5 years. We've got another resource about 30 kilometres south, exploration target at Red Hill, very comparable resource, high grade, long life, and another asset over in Mozambique as well, inferred mineral resource that neighbours the Rio Tinto property. So they're good quality resources in established mining districts and long life. Thanks, Paul. A little bit more about the Port Gregory project. I've spoken about the project metrics, so I won't redo that in any detail again, other than to emphasise the free cash flow generation, 588 mil over 16-year mine life, which creates lots of opportunity for return to investors, as well as development of the other projects in our portfolio. We have got a project funding pathway. We've been using IHV Mining for the technical support work and studies work. Their parent company is based in the Netherlands. They've seen the value proposition associated with the project, and they've advocated on our behalf with Atradius, the Dutch Sovereign Wealth Funding, who have given us a letter of support. They'll undertake their due diligence for funding of all the Dutch-based content in the project over the course of the PFS and FS. We've also engaged with Export Finance Australia, who are also happy to accompany us on the journey and do their due diligence too. So a couple of avenues there for funding, and we'll also explore some more traditional pathways as well. Very technically simple project. First of all, scale, very small scale. We're only generating 150,000 tonnes of product. To put that into perspective, that's probably as much spillage as some of the big iron ore producers have in a month. We're mining in sand, if you can call that sand. So a little sand pit, no drill and blast, all free dig. The flow sheet for the process plant is all traditional technology, tried and proven. We're going to enhance that a little bit as we go through our study phase, so we can produce a more superior product than what's currently on the market. And we're into our feasibility study at the moment, which will be finished by the middle of next year. We're in an established mining district. GMA have been mining right beside us for 40 years. The Ellison family have just put $100 million into the RDG business, which is just 25 kilometres up the road. So we're in a good district. Lots of opportunity for economic benefit sharing with the local communities, and strong local support, strong market support. And I'll talk to that in a bit more detail. You can see on the map where we're located relative to Perth and relative to Geraldton. Thanks, Paul. So what is Almandine Garnet? Almandine Garnet is a blast media. So it's used for blasting steel surfaces prior to a protective coating being put in place, and produces a very high quality, if not the highest quality that a blast media can produce. So putting it very simply, this cleans up the surface before a paint is applied to a steel surface. What's unique about Almandine Garnet is, one, the particle size is very rounded, as I showed on that front slide, as opposed to some of the sharper edges you get on other blast media that tends to embed in the surface and can contaminate. It's also very hard, 7.5 on the Morse scale. That compares to diamonds, which are 9 on the Morse scale, which means it's very effective blast media. It's very cost-effective blast media. It's also very pure, which means that it doesn't have workplace health and safety risks, such as silica sands, which are used as a blast media and can liberate silica fibres, or some of the slags which are used as blast media, such as nickel, copper and coal slags, which have heavy metals that can enter the environment. Typical uses in large fabrication yards for the fabrication of steel ships, offshore gas platforms, and also for the wind platforms, especially those that are located in a marine environment or a coastal environment. Next one, please, Paul. As I mentioned, very simple process. We intend to bag some product in Australia for the domestic market, but the lion's share of the product will all be exported in bulk to destination markets, bagged at those destination markets, and sold in those destination markets. And we'll be producing likely 4 products. I've spoken about the blast media applications. Garnet's also used as in high pressure water jet cutting as well, and we'll be able to supply into both of those markets. Thanks, Paul. In terms of the supply side, bottom right-hand corner, you can see the supply curve that dropped off considerably just after 2016 when the Indian garnet mines came off the global market, and also the Harts Range mine in the Northern Territory came off the market. It's unlikely that any of those producers will be coming back onto the global scene in any significance in the near term. And you can see that global supply hasn't lifted much above 1 million tonnes since late 2016. If we go bottom left now, we currently have a market deficit. When we're coming online, the forecast market deficit is about 250,000 tonnes a year, broadening to about 500,000 tonnes a year. So we don't see any issues placing the product in the market. Top right-hand side, you can see the obvious supply-demand curve impacting price point with price per tonne increasing. So we don't anticipate any issues selling the product into the market. Thanks, Paul. These are the global producers of garnet. I've referred to Almondine garnet, that is a superior product. There's also hard rock garnet identified with the green dots. It is hard rock mining. It produces a particle with jagged edges. It can bed in the still surfaces, but they're the global producers. There are some of the end users for blasting and water jet cutting. And I'll update this and include some of the local organisations that we know, up in the Pilbara, the BHPs, Rios, FMGs, Chevron, Woodside, all of those companies use garnet for blasting their steel structures, especially in the marine environment. Thanks, Paul. If you just tab forward. So near-term opportunity is Port Gregory, low capex, bit over $110 million, very healthy free cash flow, decent NPV for the capital of 110. We're doing the pre-feasibility study, which will further de-risk that project, but also give us better precision around the financial metrics. Funding pathway identified, and that'll be worked up further as we progress through the next 2 study phases. We will also be doing some product testing over the next 12 to 18 months, and also looking to secure letters of intent with customers prior to the end of the feasibility study. And as I touched on previously, strong global demand and increasing demand over time. We don't anticipate any issues placing the product. Thanks, Paul.
Okay, thanks very much, Andrew. I've got a few questions for you. The first one is around, can you talk a bit about the competition in the garnet market, particularly against some of the established producers like GMA and some of the well-resourced ones like RDG?
Yeah, no, thanks, Paul. So GMA have been producing for 40 years, a very well-established brand in the market. They're supplying into the domestic market and also international market. So certainly a key competitor of ours. Also RDG, who are just standing up their mine north of us and working through some of those initial commissioning issues. But both of those producers will be manufacturing very similar products. We'll, of course, look to do things a little bit better and produce a more superior product. There's a little bit of Almondine garnet out of South Africa, as well as mainly a small size fraction for water jet cutting. But for me, it comes back to the market forecast. We've got a deficit at the moment. That's broadening to 250,000 tonnes at the time we're coming online. There's no other obvious signs of material amounts of additional garnet coming onto the global market over the next few years, and that's broadening out to 500,000 tonnes. So there's competition there, but all the indications show that there's more of this garnet required globally.
And with that sort of competition, are there any differences in the product quality between the producers?
Well, we're mining from the same resource, So what it comes down to is how you can optimize your flow sheet to minimize the amount of contaminants that you have in the final product, such that when that garnet gets blasted onto a steel surface, it produces the cleanest possible finish. So we're putting a lot of work into our flow sheet as we go through the pre-feasibility study and also the feasibility study, so that we can differentiate our product from our competitors, because it is very, very low in contaminants.
Thank you. And another question here, can you give some additional colour on the garnet market and some of the supply-demand fundamentals that drive it?
So as I touched on, the key drivers on the supply side, and maybe, Paul, we can just touch back to those charts that I had in the deck. The key drivers on the supply side, bottom right chart in 2016, is that the Harts Range mine in the Northern Territory shut down, and the Harts Range mine is a long way from the Port of Darwin, and as you can imagine, water is a challenge in that particular location. So there was a significant amount of garnet that came off the market at that particular time, and also all of the Indian garnet producers came off the market at about the same time because of regulatory issues that the Indian government had identified with those producers. So they're currently supplying domestically, and best information is it's unlikely that that will change, come onto the global market in the near term. Equally, the Harts Range mine is unlikely to start up again for the reasons that I mentioned. So that's what's going on primarily in the supply side. On the demand side, we've got all the traditional demand for garnet. However, Australia is one of the jurisdictions where silica sands has been regulated out, but there are developed countries where silica sands are still being used. We anticipate that with time, they will be regulated out because of the workplace health and safety issues. Equally, the stockpiles of slag are starting to reduce, and also for the environmental reasons I cited, we expect over time they will be regulated out. None of those factors are taken into consideration with this forward-looking demand curve. And then when you look at some of the other data points, I touched on the wind farms before. There are wind farms being placed offshore off the coast of South Korea, and 2026, 27, there's forecast to be sea-based wind farms off the coast of France. But each of them have between 6,000 and 8,000 tonnes of steel, which will all be in a marine environment supporting a 15 megawatt wind turbine. So in order to put a coating on those particular structures that'll be sea-based, you want your best possible blast media to do a surface finish on that before a coating is put on place, because the last thing you want to be doing is doing in-situ coating repairs. So none of those factors are taken into consideration with that going forward forecast, but certainly they'll be factoring into demand for blast media, and I expect in particular almandine garnet going forward.
Andrew, it's been an absolute pleasure having you on today. There are a couple more questions. If you could answer those offline, it'd be much appreciated, but thanks for taking the time. Fascinating story, and one we'll keep a close eye on going forward.
Thanks, Paul. Thanks, everybody.